What is the most likely path for Bitcoin in the coming weeks and months, up or down? It seems that crypto Twitter has turned very bearish recently, and I've even had people in my Snake Pit Telegram, which by the way you can join right here if you want to, think that I'm getting a little bit too bearish with some of my price targets, which I'm going to share with you tonight. I also want to look at the chart from a slightly different perspective than I've looked at in other videos. I had somebody message me about, most of the indicators I use are lagging indicators. Do I potentially have any leading indicators? Well, the truth is, there's no such thing as a leading indicator in technical analysis. They're all lagging indicators, even the ones that appear leading are using past data to make future inferences. But I can show what I feel is as close to a leading indicator as it gets, and that's looking at wave trend analysis. So I'm going to do that in tonight's video. Welcome to Crypto Simulation Theory. I am the Gaussian Snick, and I'm excited to bring you some not financial advice. Nothing I talk about is financial advice. And go ahead and hit that like button on the video right now and subscribe to me if you're not already subscribed, because you're going to get the deepest crypto technical analysis anywhere, and explain to you in hopefully a very easy to understand way. So without further ado, let's go ahead and bring the chart up on the screen and take a look at what we have going on here and why people are saying that I'm becoming a little too bearish. So my last red zone, if you've been following me for any length of time, I had a red zone between, I think it was like 45 and $50,000 where I set my red zone, kind of in this region here. That's back when Bitcoin was like up here in March, and I said I think Bitcoin can drop to 45 to 50K, and people said I was probably being a little too bearish at the time. We ended up dropping to 40, I think it was like 49K or somewhere around there. So we hit my red zone, and so now I've made a new red zone. And this one is getting people worried. I'm saying, you know what? I think Bitcoin could drop to between 25,000 and $32,000. And that's a pretty bold claim to make. And I mean, even just looking at this chart right now, it's a long way down. You almost feel like it would break bull market structure if that happened. I don't really feel that it would, because even if we came down to that price level, just real briefly, if I were to just draw, yeah, of course, we know it's not going to go down a straight line, but just, for argument's sake, let's just say that we did something like this. And then afterwards, I know I could use a path drawing tool, whatever. Sometime afterwards, you start, pumping like crazy. Um, would we have really broken bull market structure? And I guess it depends on how you define a cycle. I'm not really concerned with the existence of a cycle. Um, to me, it's just long-term behavior. And if I drew a trend line through here, you can see that it wouldn't be that unreasonable to kind of wick below here. Like this is like 36,000. Yeah, so I mean, to like go below 36,000 would not be all that surprising considering what happened in 2020. And that's kind of like what I'm visualizing. I have a lot of reasons why I'm choosing this red zone, and I want to kind of help you understand. I think that Bitcoin is going to blast off of this line, that I think is acted as kind of a long-term support for quite a while. I mean, we can even trace this back all the way to here if we want to, and get even more touch points on the support line. I don't really like this color for my support line. Um, are any of you like really particular about the colors you use? I think I want yellow. Okay. Anyways, that's just me being a little bit over the top. But I think something like this is possible. It's just a very simple, point of view. I think at least getting to like 36 or 37K is certainly achievable. And I think we could push lower on a wick. I don't think anything down in this zone is going to be anything that lasts for a while. But okay, let's get into the analysis and get into some of the reasons why I feel this way about Bitcoin. So I took the red zone out, so you already know where it is. So what I wanted to do before I get into the wave trend analysis is just go over some very simple moving averages. They're actually not simple moving averages or whole moving averages, but they're simple in a sense that they're just two moving averages that I've used. Um, if you're new to my channel, I use whole moving averages instead of simple moving averages or exponential moving averages, although I do love the EMAs, because I find that they're less lagging and they can actually provide you with better, like death crosses and golden crosses on simple moving averages don't usually mean a whole lot. But on whole moving averages, they can actually take on quite a bit of meaning. So what I want you to notice this is on a weekly time frame, is that Bitcoin is about to have a death cross on the weekly time frame with the 50-week whole moving average, which is in blue, and the 100-week whole moving average, which is in white. And this is a pretty significant event that has only happened, I think, about 4 times in Bitcoin's entire history. So it's significant. It's worth studying. It's worth trying to see what a likely outcome is with a death cross of the 50 and the 100. Now, it is still lagging. So the death cross is reflecting how over the past 50 weeks, which, is more than this, it's a lot more than that. Generally, the trend has been kind of heading down because of this contribution of downside. As well as the 100 week is also starting to turn down a little bit. So it looks like a death cross here, probably by next week, maybe a week after that at the most, is the most likely scenario. Now, despite me showing you that red zone, I actually think the most likely short-term path for Bitcoin is up and not down. So if you want me to kind of get into a little more granular with how I think Bitcoin is going to behave, I actually think that probably as early as next week, we're going to start to see movement to the upside. And I actually think September could provide us with a new all-time high for Bitcoin right before rate cuts. And I don't think it's going to be a super impressive all-time high if it does happen, and if it even does manage to take it out. I can see like 75K, maybe something like that. Um, and then I think we're heading down. Now I don't think it'll be straight down, but I think after rate cuts, I think it's going to be downward with pumps. October tends to be a pretty good month, so maybe October we'll have another pump to retest that or something. I don't know, but like I'm not going to get into the granular details beyond that. But what I will say is I think short term we're looking at a potential pump. And now why do I think that? Anything I say is going to be backed by data. Okay. Now, this was almost a death cross and we had a pump. But let's go to the actual death crosses. So the last time we had a death cross was here in July of 2021. And I want you to note that this death cross came on, I went through this, it was brutal. It came on the April top, and then we just had this massive correction with 2 giant red candles, and we had this accumulation phase down here. We could call it a Wyckoff accumulation if you want to. And so the death cross happened on July 12th, the week of July 12th, and then 1 week later, we started pumping like crazy. We pumped up to the 100 week, got rejected, but then we held a 50 week of support, got above the 100 week, and then we entered the bear market. So, do I think something like this is going to play out? Not exactly, but I do think, okay, we have evidence for a pump into a death cross. Now, that's just one data point. Let's go back further. Okay. Here's another death cross. This was in December 9th of 2019. And you can see that after this death cross, we continued with some sideways movement for a few weeks. And this could also happen to us now. I mean, there's no guarantee that we're going to pump. But then what happened? What happened in early 2020? We got a pump above the 100 week, followed by a dump. So I want you to notice a pattern, right? Let's go back, right? In 2021, we had a pump, followed by a dump. Okay. Death cross in 2019, we had a pump followed by the COVID dump, and this was a recessionary dump. Rate cut started around here. We had a slow bleed. Okay. Now we've had a slow bleed before rate cuts this time, so that's kind of interesting. Like in 2024, the slow bleed's already started, and we haven't even had a rate cut. But is this really much of a bleed? Like the angle of this is not that steep. I think you may see downside pick up later with the rate cuts as much as we may not want to believe that. I think it's the most likely scenario. Okay, all right. So I haven't convinced you yet. I've just shown 2 data points. Let's go back even further. This is, I already talked about this one. Let's go back to this death cross. This was April of 2018. So we had put in a major top, a tweezer top, which is historically very bearish at the end of 2017. And, started our little dump into the bear market. And you can see we got a death cross in April of 2018. Now, what's interesting about this death cross is we did pump into it, but it was really just a kind of a weak dead cat bounce. But even so, we pumped into the death cross. We never made it to the death cross price target, which is around 11,500. And if you go back to this death cross, we actually did make it past the price of the death cross in 2020, and in this death cross situation, we got above it. So um, two times we've made it above it, one time we haven't, but still there was a pump. That was the third instance of it going back in past history. Almost had a death cross here, pumping. Um, so death cross seems to spell doom afterwards, not during, right? So this is a golden cross. I don't want to talk about those right now. So this is a death cross in May of 2014. We were kind of just screwing around here, and then we had a really nice pump. Almost made it to the death cross. It was just a bear market rally that ultimately fell below the 50-week, but still a pump into the death cross. It started actually, I would say, a pump right after the death cross. So our pump may not start next week. If it does happen, it could start the week after. It could start the first week of September. I can't tell you. I don't know, but odds are we're going to have one pump and then dump. Okay. And then I think that's the last recorded death cross in Bitcoin's history, but we can sort of extrapolate one existing. So if you go back to Bitcoin's like earliest history, this is like 2011, you could sort of imagine that if a 100-week HMA had existed, it probably would have been like around here. And you can see, what did we do? Pumped right after the death cross, pumped and then dumped. Okay, so if I go with these historical examples, I've seen time and time again that after a death cross occurs, or around the time of a death cross, either slightly before it or slightly after it, and while we're even under it, we usually see some sideways choppy price action, and then usually we get an upside pump. An upside pump can be dramatic. There's a possibility of taking out the previous all-time high, and I think it's something we should consider happening. And then that fools people into thinking, oh, the market is great, only for it to roll back over. And I think that is actually a quite likely outcome, not based on anything other than just studying the history of the stock market and how it's behaved in past, rate cut environments. So not all of these death crosses occurred in rate cut environments. The only one that did, that was significant, honestly, was the COVID one. So if you go back to 2020, you know, this pattern seems like a more volatile version of what we've been experiencing in the past, few months since March or April, and you can almost kind of see something like this coming. I think what we're about to experience is going to resemble this a lot more. Not exactly like this. I think it'll be a slower process. It takes a little bit longer, but I think it's more likely to represent this kind of idea, maybe with a higher high instead of this lower high, than something from like 2021. I don't think that we're about to repeat the double top from 2021. I don't think it's going to happen. I think something like this is more likely to play out, but more stretched out. Okay, stretching itself out into 2025. And you can see that what ends up happening is you get this pump. That's sort of, everybody thinks is a bull market pump, but it's actually a bull trap. And then rate, this was a floor of rate cuts. So I don't know where the floor of rate cuts is this time around. I've done a video on rate cuts, so I'm not going to repeat myself here. You can go check that video out on my channel. Bitcoin rate cuts, several videos on it where I've overlaid the federal funds rate. But you can sort of like imagine, a scenario like I've drawn out, right, where maybe we go sideways a little bit into the beginning of September, and then we get like a really nice pump right out of this death cross, and maybe even hit like 80K. Like who the heck knows? And and maybe this is even surprisingly sustained um, somewhat. I mean, we bounce off of the old all-time high, and maybe this is sustained even into October. Maybe in October takes us a little bit higher, and then as we hit in November, maybe we start to get you know that rejection down and find a bottom sometime in 2025. Like, of course, it won't go exactly like that. There's always bounces, but something along these lines. Maybe March. March is where March is usually a crappy month for crypto. Maybe in March we get just a really nasty drop to sort of retest the previous breakout level. I think 32K is a reasonable bottom, honestly, but I could see this getting pretty bad, and potentially we could have a wick down below 30K. And I think that will be the last time Bitcoin ever goes that low if that happens. And then from this point, I think we could, sort of see um, a massive volume candle. That's what I'm looking for. Like I'm looking, April's traditionally a good month for crypto. I'm looking for a massive volume candle, like you know, let me turn on the volume so you know what I'm talking about, but a massive green candle. Like you can see where these have happened in the past. So like if you go, and don't worry, I'm going to get to the wave trend analysis. All right. Um, but like I just want to kind of explain to you like where my thoughts are coming from. So I'm a little bit lost right now. Let me find myself. Okay. So, you know, I want to see stuff like in 2020. Yeah, this is more of what I'm looking at. Look at this. I want to see a giant red candle of sell volume followed by a giant green candle of buy volume. This is what I'm looking for. Has that happened yet in 2024? Have we gotten something like that? Not really. I mean, over here we got some pretty nice buys, but I want to see even on this drop down here, like that's a very puny sell candle. Like I am looking for a major drop. Okay. It won't be as percentage wise as deep as this one, most likely, okay, because this is a more volatile time. We have diminishing volatility, but this is kind of what I'm looking for. And if I had a guess as to when this is likely to happen, I would say maybe quarter one of 2025 at the latest. Okay, could happen sooner. You know, that's the hard thing for me is I really don't know how to time it. If we go back to the previous death cross pump, um, you know, where was it that I was talking about? I think over here in 2014. So yeah, I mean, here you were already in a bear market. So we really only have one instance where we were not already kind of heading into a bear market, and you know, and that just so happened to coincide with. Sorry, I'm getting lost. Let me put on auto so I don't have to keep scrolling around. Um, where is it? 2020. Yeah, sorry. I'm sorry, guys. I'm getting a little lost on the chart. But this is the only instance we really have, and this is what I want to see. I want to see the market get drained out to where huge buy volume comes in. And I think that's how Bitcoin's going to recover. And this is where rate cuts hit a floor. So our situation truly is the most similar in terms of like what we're going through to 2019 and 2020. It just is. Okay. We're in a similar kind of environment. So I'm looking to past history to get some idea of what is like a likely outcome for Bitcoin. It will not follow this exactly, but you know, I would like to see okay, death cross pump and then dump and then bull market. Let's go over that again. Death cross pump and then dump and then bull market. That is basically, and you're going to get your year long, you know, roughly bull market. Okay. And I don't know. I think who the heck knows what the bull market ends up looking like. I think the overall structure, if you were to zoom out on it, probably would look a lot like 2017. Okay. Some combination of 2017 and 2013. I do think we are heading for probably a blow off top in 2025. But you know what? I'm not going to talk about that right now because we're not ready for that yet. And I need more data. So, um, okay, let's get into the wave trend analysis. So if you've stuck with me so far, thank you for your patience. So just I have to give you some background before we get into wave trend analysis. So if I turn on the wave trend, I'm going to turn off the volume. I mean, we're actually going to zoom in on the wave trend. This gives you an idea kind of if you were to visualize a rate of change of Bitcoin's price over time. So like the slope of it, you can get information from things like the RSI that tell you the slope of the rate, you know, the slope of the rough slope of how price is changing. But I really like the visualization and the wave trend analysis. So there's a lot of different wave trend analysis that you can do. I personally like the wave trend oscillator. This is one of my favorite tools. And so we can visualize it in isolation and kind of get an idea of what's likely for Bitcoin. And what I want to show you, we're going to put up the entire history of Bitcoin on the weekly. All right. So there's quite a bit of history. And I want you to notice something. Okay. What do you notice? So there's this red region up here, which is representing extreme overvaluation. There's the green region, which represents undervaluation. Now, the higher up you get into the red, which means that the lighter it gets, the more overvalued you are. The lower you get into the green, the more undervalued you are. And you can see that this doesn't always necessarily correspond to price bottoms. This has more to do, you can almost think of this as similar to the reverse Chanday momentum oscillator or price momentum oscillator that I use frequently. It has some similarities to that. So bottoms on here aren't necessarily going to correspond to Bitcoin tops. I mean, to Bitcoin bottoms, like in price. Like we know that June 2022 was not a bottom, right? The bottom was like around here. which on the wave trend is still a bottom, but it was ultimately a higher low. And if you were looking at something like the wave trend analysis, you could actually get a clue that the bull market was probably building. You would actually get a clue of that. The moment that you went into the green, that's like, you know what? I better start accumulating Bitcoin now. And I did accumulate Bitcoin. I actually started my accumulation right here. I wasn't using this tool, but I did start my accumulation in June and I ended my accumulation in December, back when I bought Bitcoin before I made a huge mistake with it. Um, about a year later, a little less than a year later. Okay. And if you look over here, this is December of 2018. Now, this does coincide with, well, let's see, December 2018. Yeah, I mean, close enough. So this pretty much coincides with the price bottom of Bitcoin after its bear market, which was a surprisingly clean bear market. And then over here, this is February of 2015, which, yeah, I mean, more or less, that's, kind of when we started to get this double bottom. And you can even see that when that double bottom came, we were higher up in terms of wave trend. So this has a lot to do with how rapidly your price is falling. It's very reliable for calling out accumulation periods and selling periods. So, yeah, if you look at kind of like the pattern, when you don't get a lot of these red dots, they kind of come in succession. So, like here, you've got September 2010, November 2010, February 2011, and you've got July of 2011, and then you've got this massive drop. Okay, July of 2012, we hit a red dot. April 2013, we hit another one. December 2013, and this was a cycle that I feel like our cycle has some similarities to, but if you look at it deeply, not really. And this is almost like a giant head and shoulders, which is similar to what we have now. Some similarities. You have like the head here, a shoulder, but it's not really a clean neckline. Um, but yeah, I mean, once we got that lower high, down to the bottom we went. Okay, and then you can see that in 2016 it was super clean. We had one, two, three, four, five, six, seven before we printed the highest red dot and actually got out of the you got above the red region, and that's usually saying, okay, bull market is pretty much close to being over. Not necessarily over though. Look what happened in April 2013. But generally, with diminishing returns, it's a little bit harder to push into these regions, and you can see that in February of 2021, we January, February, we got up here in March, April, and then when we had our secondary top in November, we didn't even make it to the red region. Okay, what about the 2019 pump? The 2019 pump actually made it higher than the November 2021 pump. Okay. And I think what we're going through here is actually more similar to what happened in 2019 than what happened in, say, 2013 or certainly 2016, 17. So we formed almost a perfect head and shoulders. And this looks a lot like the reverse Chandy price momentum oscillator, but just a much clearer visualization. We formed a pretty nice head and shoulders on here and then had a pretty drastic drop. Generally speaking, when you drop like this, like I'm expecting, because we're at the zero line, I'm expecting that we'll hit some kind of bounce soon. That's what I've been talking about. Right? I don't think we're going straight down. I can even see this starting to curl over a little bit. But you can see that bounces have typically happened below the zero line. Okay, around or below the zero line. Back in 2012, we had like a little bounce around it. You can see in March of 2014, it wasn't that much further below that we bounced. Um, you can see August of 2015, we had a bounce. Okay, February 2018, it was kind of a weak bounce, but we still had one. Um, and then in October 2019, see a very weak bounce. So you can almost count on it that it bounced, at least according to history, right? Even here in September 2023, we got a nice bounce in October. So I think there'll be some kind of bounce. It may come lower, but I think it's going to happen. Um, but I think we may spend some time down in this lower region more than people think. And I think it's going to freak a lot of people out into thinking that the bull market is over. And the only reason I'm getting so bearish, like medium term, I think medium term I'm kind of bearish. Short term I'm bullish. Medium term I'm kind of bearish. Long term I'm very, very, very bullish. Okay. I think we're going to have some time that occurs from this head and shoulders in the red region to the next time we get into the red region. And I think the next time we get into the red region is probably going to happen later in 2025. I think it's going to have to be spaced out by quite a bit, and I think we may get above it. Okay, I think we're gonna spend some time, almost like we did here in 2019, but just more extended probably. And that doesn't mean that price won't go up. And in fact, it doesn't even mean we won't take out our all-time high. It just means that the bulk of the bull market, I think, will probably occur. If I had to guess, like the really explosive part of it, probably mid to late 2025. Okay, if I had to guess, I still think there's going to be some great green months along the way, and you know, well, who knows? It's just this looks really bearish. Like I don't think anyone could look at this formation and say, "Wow, that looks super bullish," because to me it doesn't. But if I sort of extrapolate out to the long term and we kind of get some, we spend some time down here and see, we don't have to go back to the dark to the green region. I don't think we will. I mean, even the March 2020 drop, which I think is right here, it went down to negative 23.25. So it was still technically a higher low. And this is how you know that your bull market is still intact, right? Is that you're not coming all the way down here. So then the question begs, well, okay, you have your low here, which was in June of 2022. You have a higher low in December of 2022. And then you have another higher low in September of 2023. So could we put in a higher low in September of or in August of 2024? Sure, absolutely. And we could have a wild pump in quarter four for all we know. Quarter four could look very bullish, maybe for September and October, and maybe even November too. But I think we're going to roll over. We're going to roll back over, and and maybe we roll over from a higher level and put in another higher low. That could happen and still bring our price very far down and then head back up into the red zone. So we could preserve this pattern of higher lows. I think, that could certainly hold. So maybe we don't need to come down to this far. Um, yeah, and we can preserve the overall structure of this bull market in terms of waveform. So that'll be something I'll be watching out for. I have another wave trend indicator that I haven't shown here in a really long time. Not because I don't like it, but because it's extremely complicated. It has served me very well, but super hard to analyze. And it's called the wave trend 3D. And this thing is like, I actually, if you were here with me during my early days on this channel, I refer to this as the Northern Lights, just because of how freaking complicated it is. Um, I don't even know if I should bother with this one, honestly. I think we've gleaned enough. I mean, you can sort of see the head and shoulders structure here. It's a little less clear. This one is kind of useful. This is a kernel moving average. You can kind of see these are different moving averages that are being overlaid out here. I actually forgot even which ones they are. Sorry, I'm trying to select the indicator so we can bring up the window. See if I can even remember. Yeah, this is a 3-week EMA. So there's a lot of you got your fast moving average, your normal, slow. This is a really really complicated thing, but you can kind of visualize the pattern of the waves again. I personally I used to really like this one, and so when this gets like deep red, this is oversold, right? We're seeing some red here, but we're really not like super oversold yet. But the kernel moving average has more or less just been kind of down with lower lows printing. So this also, I don't know what's going to happen here. I don't know if we're going to go dip back down super low as we head in, maybe into the end, or if we're going to kind of curl back up a little bit. But this is certainly also just kind of suggesting that, bearishness still may be an issue. Another, this isn't really a wave trend, but another tool that I like to use. Let me kill some of these indicators so they're not popping up on the screen. I want to show you one more before we kind of call it a video. So another indicator that I like to use sometimes is a bull bear power trend. It's not really a wave based indicator, but it's really has a nice visualization. And if we just kind of look at all the data from past history that's available, you can see that it's quite unlikely that we're heading into like a massive bear market like what we encountered. Here is your um, June 2022 and your December 2022. The further down the red goes, the more the bears are in control. The further up the green goes, the more the bulls are in control. If you see red histogram bars, it means the bears are firmly in control. If you see green histogram bars, it means the bulls are firmly in control. The bulls are still in control. But what's happening, right? and the black line is sort of like a moving average line. But I'm more concerned not with the again the details, but just the overall trend. Our black line has kind of been really, it hasn't been at these low levels since August, September. So the question is it going to roll over again or is it going to bounce back up? I think it's going to bounce back up. I think that the bulls are going to be in control probably at some point between now and rate cuts, and maybe even slightly after rate cuts. But I think ultimately we're going to see something very similar to what happened in 2020, which is something like this a mini, you could almost call it a mini bear market. I call it a recessionary bear market. You could call it like an echo bubble bear market if you wanted to. So we might see something that looks a little bit like this, but smaller. Okay. So like if I had to draw it out, right? I'm thinking the Bulls will remain in control for a little while longer, but like let's just say November, let's just make it okay, like maybe sometime in November the market starts to roll over again. We could see, oops, okay, our drawing is not my skill. That's my wife's skill, not my skill. Um like something like, you know, I don't know, like that. Maybe not this deep. Okay, I don't think it would be this deep. I think it would actually be more shallow, kind of like ending somewhere in here. But just meaning we could have like, and I don't think it'd be this long either. This is way longer than I think it would be. But my point is like I think we could have a similar thing to kind of what happened here, where the bears do get in control for a little while the market kind of unwinds, figures itself out, and prepares for those final rate cuts. So I think something like that could play out where you have a period where the bears are kind of clearly in control. Isn't it remarkable that the bulls have still been in control this whole time? Like people, markets like in extreme fear, and because it's an extreme fear, I think we are likely to bounce soon, and also and then create a fake confidence for people, and only for the market to roll over one more time. And I think that's what it's going to take to get this bull market started. And it may sound weird that we need to roll over first for the bull market to get started, but I think we need to have kind of like maybe like a little echo bubble of the bear market. And I don't think we've got that yet. I mean, this is what kind of drawdown have we really had? I mean, not much of one, honestly. Like if you think about this wick, which was just bought up super quickly, it's like a 33% drop. Now, okay, 33% drops are typical in bull markets. It's not unusual, and I think with time, those kind of drops are going to be less and less volatile. But I mean, look what happened in 2021. We had this drop. I went through it, and it was actually kind of like really brutal. It was like a 56% drop. Okay. What was COVID? The COVID drop. Like, I think we should look to that, right? The COVID drop from the high in June of 2019. And remember, that bleed started out really slow too, even though rate cuts were happening. So I said rate cuts may not immediately plunge us down. That was a 72% drop. How far was the drop in the actual bear market from the top to the bottom? An 84% drop. There's a big difference between that, 10%. So if we look at our bear market and kind of look from top to bottom, okay, 69K top, that was a 77% drop. So maybe we get like a 65% drop or 67% drop from our bull market top. I'm just making this up, okay, as I go. I don't know if you should really take it that seriously, but where would that place us? Like 67%. Okay, that's what, like 66, let's say 65. You know, 65% would be a wick down to just below the breakdown, right? How about if we go to my red zone, my new red zone, the top of the red zone at 32K, that's like a 56. So it's like a comparable drop to what happened here. I absolutely think that's possible in a recessionary drawdown. If we didn't have an inverted yield curve, unemployment going up, rates super high, and all this stuff, then I would say, yeah, it's probably not going to happen. I would actually think that a correction like this would be enough. And you have a giant cup and handle forming here. This handle could get invalidated. Okay, keep that in mind. Just because it's a cup and handle right now doesn't mean it's going to stay that way. But yeah, so I think like a 50 to 60% drawdown would be reasonable. I think going to 65 to 66 is probably a little too much. I don't see us going to 24K, but 32K does seem certainly within the cards. And just one final perspective for you on why I think those prices could happen. is just look at the visible range volume, visible range volume profile, or VRVP. Maybe you can throw some fibs in here. Okay. I don't know what I just did. So I think I hit the wrong tool. So like something like that. You can see right now what's happening, folks. We're not really doing great at the 886 fib. So we're probably heading back down to the 786. Okay. And then where's your next level of major support? It's at 42,000. So I would say, like, if we weren't facing a potential recessionary quick bear market, if you want to call it that, or just a drawdown, whatever you want to say, I think that 45,000 could definitely um, could hold the support, and it may hold. There's a lot of support there. Okay. So that would sort of like be a place I would be looking for a potential reversal. But I think that in a rate cut environment with all the crap going on, there's a lot of air below. Okay. And you don't really hit a brick wall until 32, really until 30K, to be honest with you. Okay. So I think, taking a trip to the zero point 0.5 fib is possible, or the 618. Okay, there's some support at the 618. But the support between the point 0.5 and the 618, there's a gap. There's a pretty big gap there. Similar to where we are now, this is not a strong region of support. Okay. We built a lot of support up at around 42K. So I do expect that we will have a battle here, and that battle could last a little while. This is why I said we could bounce around a lot over here and even take out the all-time high potentially on a wick or something. But um, I mean, I'm not ruling that. I'm not saying it's going to happen, but it could happen, right? But I think we're going to spend some time playing around with these fib levels, and I think it may surprise you. I think by March of 2025, that would be sort of my base case is where this is all going to end. And I think that's where we could see something kind of like what happened. I'm not going to throw it up here, but what happened in 2020, something similar, just over a longer period of time, and it won't be exactly the same. So it's going to look like a little bit of a staircase down. I think that's what happened with the S&P, and it would be reasonable to think Bitcoin will partially retrace some of this move just to make sure we're still in a bull market. And if we bounce at the zero point 0.5 fib, folks, that's still a higher low. Like right here, low one, low two. Um, you could call this low three, and yeah, we would definitely be taking that out. Okay. So if you think this is low three, this is to me is not really a convincing low three. Like this doesn't even look like a low, it just looks straight sideways. But sure, if you wanted, then you can say we need to bounce here. But I think just as long as we bounce here, we're fine. So even if we came down, uh, my screen is freezing on me. Okay. Sorry. I guess my computer can't handle all these things. Oh, look what I just drew. I drew a bunch of lines. Okay. I don't know. I think I'm just gonna. All right. That just. I don't know what happened there. Sorry. I was trying to draw that my computer froze on the screen. But yeah, as long as we come down and bounce back up from here, I would call this a sufficient higher low. Okay. Could it be there? Sure, it could be here. I don't know where it's going to happen, but I'm looking for that wall of buy volume to come in. A wall of sell volume first, and then and then people are like, "Ooh, that's a good deal. Bitcoin at 32K." So that's kind of like what I'm thinking. So um, what do you think? Let me know in the comments down below if you think that my analysis is reasonable, or you think maybe I'm overlooking something. Do you think I'm being too bearish, or do you think that my short-term bullish, medium-term bearish, long-term very, very bullish is a reasonable thesis to have based on the data that I've shown you? Just to kind of recap, we've gone through things like whole moving averages. We looked at those. We looked at death crosses. We looked at the history of death crosses. Then we I don't know, we did some other stuff. We looked at wave trend analysis. We looked at um, different, mainly the simpler waveform, right? Not the complicated Northern Lights one too much. And we ended up looking at some VRVP and fibs, and I don't know, just based off the data, I can't help but be kind of bearish for, maybe till March of next year. Like, again, this doesn't mean that we won't have green months, nor does it mean that we're in a technical bear market. I mean, I'm calling it a recessionary bear market because I don't know what else to call it, but you could call it a drawdown, you could call it a secondary scare, you could call it whatever you want to call it. I just think that Bitcoin is going to put in a higher low, a macro higher low, and prove the bull structure. And this is why, like, let me just go back for 1 second. Like, you can almost picture, sorry, I'm just drawing and drawing and drawing. Trading view frustrates me sometimes. Okay. Um, well, if this like blasts way off, like, 200 something thousand, which let's make it do that. Like, let's say not 300,000, but I think a top could be somewhere around here. Okay. It's not going to go straight up, by the way. But if you were to look back at this, doesn't that seem reasonable? Like, this accumulation zone, this really long accumulation zone, and boom, blast off in 2017 style into a bear market. Okay. And I think that next bear market could actually be a pretty slow one, especially if this corresponds with if this coincides with a recession. I don't think this is a recession, but let's just say, like, in here, this bear market coincides with like a recession. And I'm not saying we're just going to bounce like right away and just blast off. Like, it could be a little bit of a delay in here. But if this were to happen, you would kind of look back on this. And to me, it looks pretty reasonable overall on the log regression. Okay. And now at some point, log regression is going to break. Okay. At some point, this is going to break. Is this a cycle that it breaks? I don't really know for sure if it is or it isn't. But overall, it looks fairly reasonable. We could get above 200,000 by the end of 2025. Okay. I think it could happen. I think it's likely to happen, especially if we have this secondary correction, an echo bubble of the dump. If that happens, I would feel so bullish going into 2025 that we could at least make it close to 200,000, if not over 200,000. I don't think we're going to go over like 260 or 270. I think anything above that is probably a little too aggressive for this cycle. And then from there, sort of, who knows? I'm not even going to speculate that far out. So if you enjoyed the content in this video and you want to see more video content like this, by the way, I noticed my light ran out of batteries. So that's why I got a little dimmer. Let me see if I can turn it back on. I mean, not like it matters. It's pretty dead. But if we were to, yeah, what was I? What was I saying? Oh yeah, sorry, I need to end this video. Yeah, if you like this content and you want to see more content like this, be sure to hit the like button, comment, tell me what you think, and join my Telegram channel, because I do like a lot of daily market analysis updates in there, and I have a really great admin team, and we've also got analysts in there who provide some. And we want one guy in there who is a professional trader, and he shares a lot of his techniques, which is just a rare thing to find in these groups. So join the Snake Pit Telegram, and you'll see me there. So yeah, nothing in here was financial advice. You're watching Crypto Simulation Theory. I am the Gaussian Snake, and I will see you in a future video, or maybe I'll see you in my Telegram. All right, let me know what you think. Take care. Bye.